To create a profitable trading strategy for day trading, you got to define your objectives, define your goals, develop a trading strategy, and your set of rules. You got to establish a routine, you got to establish a review process, incorporate effective risk management strategies, and avoid emotional trading. So trading plans, these are essential in order for you to maximize your returns, minimize your risk, as they're going to lay out all the criteria that you follow to trade. So these can require the uses of variety of different strategies, technical analysis, fundamental analysis, risk management tools, and money management techniques. Now, the process to design a day trading plan, it starts with setting realistic expectations about the type of money that you think you can make. You should also determine the type of trades you want to focus on in terms of size, duration, and the assets. Risk management considerations are also important, and this includes establishing appropriate stop loss levels and determining risk-reward ratios that you find acceptable. It's also necessary to track performance and track metrics across the time periods to assess your progress towards the goals and identify weaknesses that you may have. So let's talk about essential components. Now, the idea behind day trading is that you will be able to make a profit by entering and exiting positions before the end of the trading session. So to do this, the plan the trader is using must be something that works. You need a killer trading plan. You got to decide what makes up your trading setup. You got to back test your ideas. You got to decide if you're going to take notice of news events. You got to set clear objectives and goals for each trade. What profits are you expecting? You need to establish risk management strategies to limit your losses. You got to continually evaluate and adjust the plan as you get more data over time. And you got to stay disciplined and you got to stick to the plan. It's a lot of work. And when you construct a day trading plan, you got to set achievable trading objectives. So it can be really helpful for you to set short-term goals as well as the longer-term objectives that you have. So let's talk about setting achievable trading objectives. So creating a profitable plan for day trading, you got to set achievable objectives, right? And to do this, you got to consider your time constraints. Well, do you work full time? And how are you going to get out of your profitable trades? Now, a key point to remember is that stop losses should also be incorporated into your trading setup to reduce your risk and help maximize potential gains. So to help ensure success as a day trader, it's really important that you think about what you're trying to achieve before you place a trade. So identify reasonable profit goals, understanding your max loss per trade, having an emergency fund set aside to alleviate having to place a trade. All this is going to help you build a more effective strategy. And using risk management protocols, such as utilizing appropriate position sizes, setting up stop losses in line with your account size, and know where you're going to exit both in profits and in losing trades. All those are essential towards building a trading plan for day trading. By following these guidelines, you are going to be able to create plans with clear targets that balance making money with the risks that are associated with each individual trade you take. So developing an effective plan is going to help you stay on track, help reduce the emotional strain of making decisions during active markets. So being able to reduce emotional responses while staying focused, that is the trait the majority of those that succeed in trading have. Assessing your risk tolerance. So let's face that, risk can be scary. And assessing your risk tolerance, that's vital. You got to analyze your goals. You got to determine how much risk you are comfortable taking on. You should track progress towards these goals. Monitor the performance of your trades. Practice in a demo account, paper trading, before moving on to live markets. By practicing your plan, that helps you become familiar with recognizing your setup criteria in real time, and that's crucial for day trading. Now, risk management, it's not just about understanding what losses look like, but also having the ability to enter your trades at the right time. If you enter too late, you miss the meat of the move. Too early, you may get stuck in market noise. So putting together a strategy, it's not as difficult as it may seem. Now, there are certain things that must appear in every strategy in order to find success. So position sizing. Now, since risk is the most important part of trading, decide early what your risk amount is going to be as it affects the amounts of shares or contracts or pips, whatever, that you're going to trade. Entry points. Well, what's going to get you into the market? Breakouts, reversals? Define the criteria for your entry price. Stop losses and profit targets. What is your cut point in a losing trade? What are your targets? You got to define them. Let's talk about position sizing. It's crucial. We already know that. By determining the amount of risk up front, you get to determine the appropriate number of contracts that you're going to trade. Position sizing should never be an afterthought, okay? But it's a well-considered and deliberate decision that is made with consideration of the potential risks involved in the trade. It's almost impossible to refund a blown trading account. So you got to take this serious. Now, risk management is so essential. I've mentioned it a few times. Now, some traders will want to scale into their positions instead of going in all at once. That may allow them to allocate capital more efficiently. Your stop loss orders, they help ensure that any losses are minimized in the event of market volatility or a sudden reversal. Tracking your performance and even diversifying your trading world is going to allow for better capital allocation among different asset classes. Not every sector performs well, and rarely are all sectors tough to trade at the same time. So if you're using the healthcare sector as your go-to sector, but it's not performing, well, look at others like financials or technology. No single strategy by itself is going to guarantee success. It requires careful planning, monitoring, and reevaluating on a regular basis to ensure maximum profitability over the long haul. Now, entry and exit rules, these help identify triggers for entering and getting out of your positions. That's going to help prevent emotional trading. This is going to destroy your long-term odds of success if you emotionally trade. Stop losses, protective measures against adverse price movements. They're not guaranteed to get filled at that price. But while understanding trends can help traders better predict the direction of future prices, something in motion, tends to stay in motion. It's facts. Creating alerts, that can enable you to stay on top of changes in the markets, adjust your positions if you have to. Tracking performance is critical to determine whether the strategy you are using is effective or do you need to reevaluate it. Ultimately, your entry-exit rules, they provide essential guidance. It allows you to take advantage of profit opportunities while minimizing the risks associated with undisciplined trading. Now listen, creating a profitable and successful trading plan for day trading, it's so important for achieving success in the markets. By following the key steps of defining your objectives and your goals, developing a strategy, and all the items that we talked about, you may actually beat the odds and actually day trade for a living. It can be done. Staying disciplined and continually evaluating and adjusting the plan as market conditions change, traders can improve their chances of success and achieve the goals that they're setting for day trading. I'd like you to hit like, subscribe to this channel. If you have any questions or comments, you can pop those below. We'll be back at you next week with another video.